How are you all? All right, today is the hot topic. So hot, so hot. And I can feel it. Can't hold it. Just have to share with you, okay? It is time to do your year-end tax planning. I know this is like a boring topic. We talk years and years every year around this time, and Ying bring up this topic to you. And I cannot tell you how important that is. If you're in business, you got to do year-end tax planning. There is not any case in our firm. We have more than 12,000 clients, okay? There is not even one case in our firm. You don't save more than what you spend on year-end tax planning. Of course, we don't do it for free. Community CPA, the firm is profit-making entity just like everything else in the world, but we bring you that knowledge, and our heart is with you, and I always here to share whatever I know. For that reason, I really care about learning because I have this deep fear in myself. One day I'll stand here talking to you, I'll be like, oh, I ran out of my knowledge. Wouldn't that be terrible? So this year-end tax planning is to prevent you from running out of your knowledge, running your business. It's preventing me from not updating what's going on. So I am constantly updating to make sure that I am qualified to stay here right in front of you. All right, let's go take a look at our YouTube channel. You're looking at that, am I right? You're looking at our YouTube channel. This is where all of our knowledge are silently stored right here. It's not loud just because if you don't click it, it doesn't play. So you need to subscribe and read, listen to it. I actually, a lot of times when I drive, I have 5 branches, so I drive a lot. And when I'm on the road, I used to be on the phone and do all kind of things, and with me becoming more mature, I don't do that anymore. And what I actually do is I listen. So I also listen to YouTube channel, and not just podcast. I listen to YouTube channel, and for the CPA talks and the other talks, I also listening to my own just to make sure that I know what to improve for the next time. All right, let's dive into what we have today. I'm eager to share that with you. I use this PowerPoint to guide my thinking, but really it is all in my head, so you just listen to me, being with me, okay? Now, let's see. So we have our topic here, and normally we go through a little understanding about who I am and what is community CPA, right? Community CPA is a firm. And a couple of numbers I give you, 12,000, that's the size of our clientele. And then the next number I'm going to bring to you is 10,000, is the 27 years. 27 is a number because we're in business for that long. 10 is the collective languages we, the professional staff at Community CPA, speak. So we speak 10 different languages. And 3, those are the years that I was the advisory in the Federal Advisory Committee and to IRS, provide advice to Internal Revenue Service. And 5, we have 5 branches. So these are the key numbers I want to brag about, and so you know. And what is the little number, the number 2? The 2 are my 2 books that are already published on Amazon. And you can find them on Amazon if you type into appointment with Ying at 8 a.m. or 10 a.m. And I am right now working on the 3rd book called 2 p.m. The 2 p.m. is about how to expand your business. Yes, you start, you grow, you expand. When you expand, you go beyond yourself. You become a collective of force. You become a bigger scale. But how do you go about that? And in that book, I talk about my client, and some failed, some gained, and I talk about community CPA itself. because we are expanding. We just expanded to Houston, Texas. Am I ready to say that's a good job and you expanded right? No, I am still going through that journey. That's why the 2 p.m. is still in the making. And my 6 p.m. is about retiring from your business or maybe repurpose of your life. I hope that I'll get into 6 p.m. really soon. But so far I don't know yet. So it's only have one page in that book right now. It says no retirement. So I just like, now you get what I mean, right? All right. With our webinars, we always tell folks that we don't have any responsibility for what we teach you here because the application of the knowledge is very different from the theory you learn here and there and including here. So you want to make sure that you really digest, understand, and engage us for service. So we will be specifically catering to your situation. In that case, we are responsible, but not when we provide that for free on the internet to people we may not even have a client service provider relationship. All right, so I want to point to you that today's webinar, has something related to these three that is already on the website. I want to show you so you can kind of see how the logo comes in for those webinars so you can find them. One of them is, do I need to do tax planning for my business? So there's a lot of people, there are people even saying to me that, oh, Ying, I just started, I don't need to do tax planning. Are you kidding me? You so needed tax planning because it could be a detrimental $10 million savings or not. Yes, I'm not making up 10 million. 10 million is a specific tax code that made available to business people. If you set up your business properly and when you sell it, and $10 million tax free. I'm not making that up. That is how important that is to plan. Plan. When you are in the business world, you have to know that there are knowledge. It's just beyond you, your friend, your people, and especially small business, immigrant-owned business. You're new to this country. What do you know about tax rules here? Or you're in the small business. Your parents have never been in the business. People around you never really had any money, and you are just, with a whole bunch of friends who doesn't really know much more than you do. And how do you know these knowledge? Yes, you need to learn, you need to engage yourself into a more sophisticated group, right? More experienced group, and engage yourself with community CPA. Yes, so what? Paying money? What's the big deal? Because you exchange a much greater future and a better business for that money you pay to community CPA. You support our professionals. Remember, we got 10 different languages. When you look at us, we are all looking like you. And we have like United Nations in our firm. You're supporting us, you're supporting the community at large. Very simple. The 10 best tax planning opportunities for 2024, I have 2 webinars, so I posted both. You want to go through both of them because they are specific. They are telling you what is useful for 2024, which is this year. All right, now let's talk about goals. And you may say that, well, Ying, I'm, fine, tax planning, so what? So what is my goal if I want to do tax planning with you? I don't know what my goal is. Our goal for every client coming to do year-end tax planning with us, number 1, there's 5 goals in here. Number 1, clean up your accounting for the 3rd quarter of 2024. You know how you can get into the end of December, then, Christmas come, New Year come, and by January you're so stressed out already because you haven't done your accounting since July of last year, right? Prevent that to happen. So when you do tax planning with us, we're going to ask you for the 3rd quarter of financial statement for your business. And that would just give you a gentle push, right? So not going to push you over the bridge, but it just give you a little force so you know that, oh yeah, it's time to do it. So we want you to clean up your accounting for the third quarter of 2024 and reduce the year-end accounting work at the last minute. So that's our number one goal. Our number two goal is to calculate taxable income. We want to use your data and understand your past, calculate taxable income for 2024. And then we use our knowledge. We pull out our toolboxes and we will be like listing all the possible transactions that can reduce your 2024 projected income, which will result in paying less income tax. Yes, that's what we do. And a clean list, what you do. And, some of those transactions you are familiar with because, you actually maybe bought a vehicle. Maybe your accountant was saying that, oh, you're making too much money. Let's buy a vehicle over 6,000 pounds so we can deduct it. You may already hear stuff like that. Those are what we call the transactions. Transactions you do before the end of the year that helping you. But in my tax planning toolbox, we don't ask you to always spend money. Sometimes we need to spend money, but not always. So there are tax saving strategies you can put in which do not require you to spend money. May require you to put money away somehow on the deferred account, but would not ask you to spend. Okay? Then our number 4 goal is to have you pay estimated tax to avoid penalty when you file your taxes. So this is very important. So we always say that our client at Community CPA do not get surprised when they come in to do 2025, when they come to do 2024 tax, and they would not be like, oh my goodness, Ying, I pay so much taxes? Are you serious? You won't get there. And we don't give our client heart attack. And because we already knew when we do planning, and we already give you the heart attack right now, and you don't have it in 2025. I'm just kidding. So in the planning stage, it's always easier to absorb the force than at the last minute before IRS shows up, right? So you actually would understand, oh, I see why I pay this taxes. We literally have our client paying taxes happy. If we made money, what's wrong with paying taxes? Nothing wrong. The government survives on the tax dollars. Come on, folks. If we all don't pay taxes, we don't have a White House. Maybe we don't even have an election. Maybe that's what President Trump wants to do. So get rid of elections. So pay no taxes ever again. Then we don't have a country, right? So forget about that. So it's okay to pay taxes, but we want to pay it with such a comfort that we know we were doing it right. We know we should pay. Or we know there is tax incentives for us, we don't have to pay, right? So that is our 4th goal. Our number 5 goal, which is the last goal, is a real goal, is the anxiety-free going into 2025. Can you imagine when the New Year bell rings, you were like, I got rid of all my tax problem. 2025 will be a good year. I know what I'm doing. That is possible. We had made that reality for so many people at the Community CPA. If you ask me how many times we have saved people from 2018, they didn't file taxes, all the way to 2023. And our people worked so hard to just bring that file all the way through to 2023. So 2024, we will file it on time, we'll plan it on time. By the time the New Year bell of 2025 rings, and this taxpayer will walk into a new life and never look back again. Because that is how good of work we will do and we have been doing. So that is anxiety-free. So that's the goal of our year-end tax planning. I think is enough to attract you to say that, yeah, I probably want to do that. And the story at Community CPA, I know that if I just give you the list of things you do and you bring this to your tax accountant, maybe you're not my client, you go to your accountant, your accountant goes, well, I'm not sure about this, I'm not sure about that. So, maybe you are not fit for what we suggested, but let me give you some stories at Community CPA, which would kind of help you to understand how things can be accomplished, right? And we at Community CPA, we don't do this planning like writing a book for you. You're not going to get 57 pages, some stuff from us, and just to show you that we spent time so we can charge you. No. But there's so much of that out there, right? When you do business valuation, what do you get? You get a book of 200 pages. But what do you look? You look at a little paragraph and just on the third page. And we don't have time for that to waste. And we want to do it right, and we want to do it clean. So our tax planning is not a book. It's an 8 by 11 page, one page. And what I'm showing you right here, that is exactly how we do tax planning. So we put key numbers in each boxes, each box representing a entity, which may be S corporation, maybe LLC, maybe C corp, and it's still 1040. And we put the key number in there. That's all you need to know. And you need to know how much money you made, what expenses you have, and what is the profit. Then you want to know that what's your standard or itemized deduction, how much of a taxes you need to pay in total. And the red color you add together is the taxes you pay. And if it is green, you add together, that is your refund, right? So we list all the things for you and what you would need to do before December 31st, 2024, so you will not be surprised. You can take this one piece of paper. Some people even take picture on the phone, and that is your guidance for 2025 tax filing. And if any number goes away, goes off, and we actually tell you why. You know, we have some cases where we did a planning, but by the time we reach 2024, we did a planning for 2023. By the time we arrived, the time to file taxes in 2024, man, people forgot about a W-2. So when we did a data match, we were like, hey, you got a W-2, how come we didn't get it? That changed the whole picture, right? So yes, it is possible your number not gonna match exactly, but this is your campus, this is your guidance, and you know what your 25 gonna be. Examples of some good plannings. So this is where I want to this is all story driven. It's not because I'm sitting in my office and just dream up those things for you. These are real things happened in the real world. May not be yesterday's event, but it is my accumulation of the past history, and we have seen things like that happen. So, example of good planning. Accumulated 450,000 passive losses from your rental estate Schedule E filing. Why do you accumulate that? You got too much income. You only allowed $25,000 rental income deduction, but you make too much money, so you never got any deduction. But your rental property was always at a loss, so over the years you got 450,000 losses sitting in your tax return, and you never even know you have it. You never even planned it to use it. Why not? So the good planning would be, if you have a rental property that with a bad tenant, they just don't pay you. And why not sell it? Sell it for $450,000 capital gain, offset that loss. What is your result of taxes? Zero. Yes, zero. So be paying attention to the passive losses, right? So this is planning item. On our chart that I was showing you, and we actually identify what are not claimed yet on your carry forward sheet. And do you know what I'm talking about? If you go to a tax preparer's office, new, they didn't even ask you about your carryover worksheet. That just means that they don't even know this part of saving that is made available to you. We have taxpayers coming to our office. They already changed tax preparer a couple of times before our time. So they came to us, told us that, they don't get along with the other one. They already changed 2 times. So what we knew from this conversation at our firm, at Community CPA, in our mind, we are thinking we want to know the original one. then all these changes, we want to make sure these passive losses are actually got carried forward. You could just lose it, not knowing you lost it. All right? So really, make sure that the passive losses is one of the good example that you plan. What about passive income of $500,000 of a couple? And this is a good planning. I have done years and years before. So the wife never really worked in the business. But the K1 was coming out for both husband and wife. So $500,000 was always charged self-employment tax on both of them. But upon study of what they're doing when they transfer their account to us, and I learned that the wife is a housewife and never get involved with the business. So there's no reason why she should report her income as a business income to pay that $37,500 self-employment tax. So during the planning time, I had made her a passive income earner and made the husband the general partners and making active income. So he continued to pay self-employment tax, but the wife will not. Savings, $37,500 a year. Good planning, right? A new business started in November of 2024, seasonal business, strong sales in November and December every year. But when they set it up, they went to this attorney's office and they set up from January to December. So now, business open for 2 months, made all the money possible to make. And do you want them to just go ahead and file taxes and pay all the taxes they have to pay? Because they made so much sales, they haven't even spent any money yet. No. During the planning time, you're going to think of changing fiscal years. To what? To October 2025. So they don't have to file right now. They can wait until October 2025 to file from November 1st to October. So all the money they made for the first 2 months is already spent for the rest of the 10th month. So they would have a lower income, lower net profit. Am I right? Good planning. Occupational school charges tuition fee for 9 months program. Total charge is $9,000 per program. So the school starts in January, but they already open registration. So between now and December, and they would get $90,000 income paid in, because the school starts in January, and every month it should be $1,000. That's why they charge $9,000. Then there you go. And in this case, good planning would recognize the revenue with revenue recognition compliance requirement and not tax that $90,000 in 2024. So the client don't have to pay taxes. That $90,000, where did that go? That is liability. Imagine if they cancel the program in December. What do they have to do? Pay it back. Because the program is not starting. So they didn't earn it yet. So it's not earned, not taxable. All right, more good planning. More good planning. Section 179. People start to forget about Section 179, and they only know bonus depreciation. And some people just don't know any of what I'm talking about. But the spirit of that is, when you do a planning, the tax accountant will look at what you bought in year 2024. Because what you bought, it will classify you into different categories of depreciation. So are you 15 years property, or your real estate property, or your land, or your client list? What did you buy? So these two can come into play together to make your taxable income zero. Just keep in mind that Section 179 cannot drive losses. You cannot use 179 deduction to make business lose money, but you can use bonus depreciation to make business lose money. So these depreciation rules is a little deeper water inside of the tax world, but you want to make sure that you work with your accountant, especially if you bought property that's worth a discussion. That is a good planning. Make sure. And you don't want your preparers just do whatever they think is right, because that depreciation stuff need to be thought through. So it's not, you can't rely on the system to do it for you. The system need to know what rules you're applying on it, then it will do it for you, okay? So it is not as straightforward as putting in a W-2 on the system. What else is a good planning? For service company, like law firms, consultants, 20% QBI deduction can disappear. You think you're going to get it? Depends. And if you are going to have an AGI of $191,950 in 2024, you say goodbye to 20% QBI deduction. That is a lot of deduction. Don't let that slip away. So planning, knowing how much your income going to be, that is important. Just make sure that you look at these two numbers. $191,000, that's for the single, and $241,000, that's for married couple, and this is for 2024 number. 2023 number was lower, was somewhat lower. I don't remember. It's 180 something and 300 some thousand. But this is 2024. So you see, then you may say that, whoa, Ying, what do you mean I plan? I already have a W-2. My W-2 is already 200,000. All right. Then maybe you can reduce your W-2 right now. You still have 5 months. What are you talking about, right? Plan. This is a good planning. What else? Transition company shares to your good adult children. They're not crazy. They're not on drugs and stuff like that. And via gift. So know that the parent can give gift to the children with the gift is the company shares. They don't have to be cash. We don't have to give them money. You own a business, you can give the kids shares. But that share valuation need to be under 18,000 per parent, per kid. So that is a transaction need to happen ASAP. You don't want to wait. This is already 2024. You're in your late 50s. What are you waiting for? If your kids is already in their 20s, you really should start thinking about that, unless you plan to sell your company. That's a different story, right? And what else is also a good planning? Good planning is on real estate side. When you buy a real estate, you bought them for $3 million, but the $3 million actually belongs to different categories of depreciation. Am I right? The land, you cannot depreciate. Building structure, you've got to depreciate 27.5 years or 39 years. Depends on it's commercial or residential. But what about these items that has a shorter time of depreciation, like the windows, the roof, the interior decoration, the appliances, things like that? Those are being depreciated differently. So certain rules of depreciation would come in to take over certain pieces. What did you do? And are you just thinking that, oh yeah, it's all 27.5 years? No. Because the property you bought has a different component, goes into different categories of depreciation. So that is a good planning. All right. What about this Job Act upcoming 2025? Bunch of them expire. I also have webinar about that too, right? So you can check on that to see what is expiring and what might stay. But with this uncertainty in election, which I'm pretty certain the election result, but again, since it's not the reality yet, so we don't know what is exactly in the play. So you want to monitoring that. Isn't that an important thing for 2025? So 2024, we still have the tax rules and regulations the way it is. So in 2025, it would be the year that everybody should do tax planning. Just the nature of the beast. All right? Now, the upcoming tax law changes, these are related to the Job Act. Okay? A lot of them expires in 2025. For example, the QBI, which I listed there, the QBI deduction are scheduled to expire at the end of 2025. Okay, and there is a lot of, I think this uncertainty is clear. We understand because the election is not over, so the tax policies and the direction of the country is uncertain. So in tax world, and we are just kind of pausing to do what we need to do for 2024, and we're not projecting out to 2025. If anybody come to you, goes, let's pay taxes in 2024, and because you're gonna save taxes in the future, and I want you to just push them out of your door because nobody knows about tax future. And I'm not even talking about this election because the election happens every 4 years. The tax future is really something you're not supposed to predict because you don't know. Unless we say that our tax rule regulation is going to stay forever. Otherwise, you can't predict. It's a little bit different than financial planners. They can say that, oh, you put in $3 today when you are 3 years old. By the time you are 70, then you will have $1.2 million in your bank account. They are using the interest rate, calculating it, making an assumption. I don't think interest income will ever go away because that's a mean of economic exchange, right? I give you money, you pay me interest income. So those are transactional level habit human society actually supports, so it will be there. But taxes is completely manipulated and completely made by the Congress. This is the group of people in the White House, they make that rule and the president signs into the law. So with tax changes, tax law changes, take advantage when they are here. You don't have to project into the future, not because we're short-sighted, it's because we're smart to know the present is the most important time. So 2024 tax planning is the most important time. All right, so how is the process at a community CPA? Now I'm convinced, I convinced you tax planning is so important. And you're like, okay, I want to do that with community CPA, so what's the process? So we do tax planning for 2024 in the fourth quarter of 2024. We don't do tax planning for 2024 in 2025. Okay, very limited. There's not much you can do other than purchase your traditional IRA or Roth IRA. Roth IRA doesn't even help you. Traditional IRA, so very limited. But if you do it before the year ends, you have opportunities. What do you need to do so this planning can begin? So we need your 2023 tax filing copies, and we need to have you send in your financial statement for your business for the third quarter so we can annualize that into 2024, right? And we want you to list out significant events in 2024, including the one that's not happening yet. For example, you're getting married at Christmas time. Those are the things we need to know, right? And then you make appointment with our front desk. You call our number. And remember, we are the company that opens 6 days a week. We are a professional CPA firm, open 6 days a week. So if you are busy during the work days and Saturday you can call, make appointment. 2024 tax planning. And when you make the appointment, of course, they will ask you for this information, but our front desk person would also block the calendar for a tax preparer and also a partner. So we need to know, who you are desiring to do the planning with. And I'll show you the partner list. But here, and the way we come up with the time, because if you have two entities, we generally, like if you have a 1040 and a business, we do it for an hour. But if you have a 1040 and 3 businesses, we do it an hour and a half or 2 hours or 3 hours. So that's kind of depends on how many entities you have. So that would be a question. When we make this appointment, we would ask you how many entities you have, or maybe we already knew, so we know how much time to carve it out. And we will assign a tax accountant for your account. appointment with me, you know, oh, what am I writing over there? My English is totally screwed up. So you normally have this appointment with a tax accountant who actually prepared all the data for me, for example, and then it's two people and you coming together. And I normally do it online just because you can view our paper just like how I view it. A lot of times if I need to draw a whiteboard for you to make your understanding more smooth, and then that can be easily deployed. If you come into the office to meet me, a lot of times we are opposite to each other. So what I read is what you read upside down. So it is not as good as the online. So most of my tax planning meetings are done with online applications, but we definitely catering people to do it in person. So these are the partners you have in our firm. So I would say that I do a lot of tax planning myself and Dr. Howe as well. And then the other person is Song, and he is one of our partners who speaks Spanish. So that's the advantage he has and to serve people. The rest of the folks, Derek is an IT person, so he doesn't get involved with the tax planning meeting. And Kwan is actually in charge of our accounting, payroll, sales tax. So she occasionally also get involved with tax planning just because our planning would deploy things that need to be done by the payroll or by her team. So with that said, you have Dan, and Dan is our business consultation and formation and license, all of these business startup doing, and there's a lot of it with Dan, and he's also helping us to onboard new client. So you got functionality of all of our partners right here is on our website. So the office that I do in-person tax planning are those 4 offices. So one of them in Des Moines, in Iowa City, Coralville, that's another location, and Minnesota is in Bloomington, and Houston, Texas. That's where our real offices are. And when you do tax planning, folks knows that what time we are in what office, so we'll book you accordingly. My last slide, but not the least, to welcome you to Community CPA for tax planning service. And our YouTube channel is really the place where you follow us and you will learn how exactly we teach and we perform. You understand that the knowledge we have is all being utilized when we work with you. So you're working with powerful engine behind the scene, and we have Dr. Howe does research for new rules that coming up. So we're not a firm that passively following the crowd. We are the one that knowing what's new, and we research, we came up with procedures, and we came up with our own analysis, so we know how to implement that for you, with you. And our office, like I said, we open 6 days a week. So on Saturday, those major offices are open. So you literally can walk in, or you can call. We have a real people online to book appointment for you. So I hope that you enjoyed today's webinar. And remember, and we have on Tuesdays, I'm using Tuesdays to talk about, they're short talks, right? I use Tuesdays to talk about election-related issues. So my next Tuesday, which is this Tuesday coming up, and I will talk about bankruptcy. I want to explain to folks that filing bankruptcy, why that is not interfering with reputations and credibilities, and how do you do bankruptcy yourself and without impacting your life, without your wife wanting to divorce you. I'm just kidding. So just kind of have you understand the impact of bankruptcy filing, and understand why President Trump filed 6 bankruptcies, but he's still wealthy and he's still running for presidential election. So these are facts, right? And I'm not feeding anything. I'm just telling you technically how that is done. I'm not his accountant. That's why I'm not in jail, you know. I'm just technically tell you how bankruptcy doesn't affect you personally, and in certain cases, how is that done? And I will see you on Tuesday about that.